Florence Jean-Jacobs is a principal economist with Desjardins and joins us now. Thanks very much for your time. Appreciate it.
Thanks for having me.
So obviously you've seen the headlines today that reportedly we won't see a day one 25% tariff story across the board. That would be encouraging for Canada's economy. We still need more details to come out. But as you have tried to tackle the economic impact, what was your starting point for all of this? How are you trying to assess what it means for Canada's economy?
Well, first of all, we looked at Canadian industry's exposure to U.S. demand. So first looking at, from the Canadian point of view, how much of an industry's revenue is dependent on exports to the U.S. So unsurprisingly, we've got energy and autos where over 2/3 of revenues depend directly on these exports to the U.S. And then there are a lot of manufactured goods as well. And I'll come back to that. But in terms of methodology, we also look at not only the Canadian exposure, but from the U.S. point of view, how credible is the tariff threat? Is it advantageous from the U.S. point of view to actually put these import tariffs on autos, energy, and a blanket tariff for all products coming in from Canada and Mexico? And there, the idea was to find, where there could be exemptions, because it would actually be disadvantageous from the U.S. perspective, American businesses and consumers to have these tariffs in the form of, for example, energy prices going up, which is counter to Trump's promises to make them go down, and then the automotive sector as well being so integrated north and south of the U.S. border that the costs for consumers and U.S. businesses would be really, really sharp. So those are just an example, but we also looked at critical and strategic minerals and a range of the wide range of sectors in the Canadian economy to identify which would be more vulnerable considering the Canadian exposure and the U.S. threat.
And that's really helpful context. We were watching some live shots as people gather in Washington for the inauguration today. The fact that there are these reports that those tariffs won't necessarily be implemented on day one, that's really hard for an economist to determine whether the reality is tariffs or not tariffs. But is it an encouraging sign to you for Canada's economy, just given what's at stake here?
I mean, if confirmed, these reports would be a relief for now, I would say, because we don't know how long it will be between the investigation of tariffs and the actual imposition of. So it is a relief for now, but we're still waiting to see, because if Mr. Trump uses emergency mechanisms, these tariffs could come in a more rapid way than expected. Our baseline economic scenario still was tabling on tariffs coming into force at the later half of 2025, but it could still come earlier. So it is a relief, and it will give time for businesses to adjust, but we still don't know what's going to come. So we don't know if it's 10%, 25%. Is it just Canada and Mexico? Is it also going to apply to other countries? And that's the big question, because a lot of our analysis depends on, is there a substitution risk? And so if it's Canada and Mexico, and we don't see these tariffs coming for European countries or Asia, then where the U.S. production is not sufficient, but the import from Canada, then there's a possibility to turn to foreign suppliers and avoid paying that cost. So that's a big question mark that hasn't been answered this morning.
Well, and one would assume that the president-elect likes keeping people on their toes as we're watching the vice president-elect arrive for the inauguration. Very quick, we only have about 30 seconds left, but I didn't get the chance to ask you the recessionary risk here. As you've been putting all this modeling together, do you think that the tariff, assuming we see tariffs, and you highlighted we don't know what the tariff picture will look like, but what's the recession risk for Canada's economy, in your opinion?
Well, for sure, in our scenario, if we're talking about 25% tariffs on all goods and services coming from Canada, we're predicting this would tip Canada into a recession, much higher unemployment. But the chances are there will be exemptions, but we have to remember that some industries will see really some sharp impacts from primary metals, food and beverage processing, chemicals, machinery, aerospace. So remember, those industries will be harder hit than others. But overall, yes, if we're talking about 25% tariffs, we expect this could lead to a recession in Canada. If we see a softer scenario, 10% tariffs, and not just for Canada, but elsewhere, then we're talking about a slowdown, but still an economic slowdown that could see unemployment rise.